Expectations for banks are changing, and they're changing quickly. The millennial generation, largest generation in U.S. history, they want to interact with banks differently. They expect banks to deliver different services. And really, when you look at how millennials consume every other service, they consume software as a service, music as a service, TV and movies as a service, and ultimately they really want to consume money as a service, which is a very different way of looking at banking, certainly than we have in prior generations. Really, the notion is that they need immediate and instant access to their money. They need to know exactly how much money they have at every moment in time, because that knowledge, that information, the insights a bank could deliver about the financial state of a millennial customer helps them make the right decisions and the right choices about their buying, their spending, their planning. That's what they need and expect from a bank. And the financial institutions that have the ability to deliver that kind of a service will really win with this new generation. Over the last 20 years, an increasing number of consumers have sought services like check cashing from alternative financial services providers. In fact, I think for most people, the 80 million underserved consumers come to mind, and 80% of them have a bank relationship, but choose to go outside their bank and pay fees for these services from other providers because they need them so desperately. But beyond that, and what many bankers don't realize is that, according to the Center for Financial Services Innovation, 135 million consumers in the United States, that's half of the U.S. adult population, struggle to pay their bills on a regular basis and require and need services that help them meet their cash flow needs. For millions of small business owners, checks remain a very prominent payment method. If you think about it, contractors, landscapers, hairstylists, childcare providers, Mary Kay, Amway, Avon, really the list goes on. There are so many businesses that receive checks on a daily basis, and their ability to access the funds from those checks instantly and irreversibly not only helps them manage cash flow challenges, but also prevents them from having bounce checks that wreak havoc on their bank accounts.
Banks have been going virtual for years. It started with telephone, which brought telephone banking. Then the internet came along, and then we have the internet bank. But most banks treated these as just additional channels to their branches. Mobile is different. Mobile changes everything because now you've married phone and internet together. You have the ability to access information from anywhere at any time. So it serves the needs of this just-in-time consumer in that they can get access to the information they want when they want it. They can look at their balance. They can check the transactions they've done, and they can move money whenever they want. It changes the way they interact with the service, and in many ways, it should change the way that they interact with their bank. In the past, whenever a bank was confronted with a strategy change or a business model change, or even delivering a new service, that entailed huge investments in legacy system re-engineering. Well, here's the interesting thing. The advances in technology have allowed for easy ability to integrate to third-party services, to take advantage of the last 20 years of venture capital investment in all sorts of new startup and upstart innovative technology solutions that they can consume, at the same time preserving their investment in their legacy systems. So the question is, does it require steep investment in technology? No, it doesn't. Never has there been a time when a large institution, a bank, with a huge investment in technology can now leverage that and then easily take advantage of new capabilities to satisfy the needs of their consumer and start to deliver on new services.
Ingo Money is a leading payments company in Atlanta, Georgia, focused on providing instantaneous, irreversible access to funds from a variety of payment instruments. We call this good funds, safe to spend funds for our consumers. We do it Omnichannel, at branches, at ATMs, at kiosks, on mobile devices. And the value we're providing for this consumer is they need real-time, safe, instant access to their funds, for example, from $20 trillion a year worth of checks that are in the marketplace. And for our financial institutions that are looking to gain loyalty and generate fee income for this consumer in a way that's regulatory friendly, We're enabling new ways for their consumers to interact with them and services that they can elect to pay for versus being forced to pay for in the marketplace.